please allow me to introduce you on stage Mr. Panagiotis Kriaris, fintech, payment and banking leader, head of corporate and business development. Unzer, welcome. Good morning.
Thank you.
The stage is yours.
Thank you very much. Thank you. So, good morning. Thanks for having me. We're going to discuss about how financial services are changing. And I'm going to try to tell you a story. But before I do, I'll just mention two numbers. So basically, it's all about change. In 2014, around 44% of payments were cash payments. In a couple of years' time, there is a forecast that is saying 20% of payments are going to be agentic payments. So let's see how we go from one number, cash dominates, to agentic payments. And the question is, what has changed? So imagine you are a few years ago, and actually this is a supermarket. So the question is, okay, what does a supermarket have to do with banking, with financial services? And I'm saying this is a very relevant picture. So imagine if you're going to buy any kind of financial services 20 years ago, this is what you would get. Basically, it's not an option. You don't have any choice. It's a take it or leave it approach. And you would go to basically bank, and that would be the offering. Now, what's next? So next we had a revolution. And the revolution said that we are now having lots of providers, and we are now living in an open economy. And this is exactly the open economy. So this is a supermarket. And there's a major difference between the two, which is choice. So you now have lots of players. You have fintechs. You can have your, let's say, a card on one app. You have your banking relationship with another provider. You basically have choice. And then from this, we went to what I call the platform economy, the likes of Amazon, right? So it's ecosystems. You can find everything. And now we are going to what I call the agentic economy, right? So it's basically agents deciding on our behalf and also taking over some of the financial relationships and some of the doing that needs to be done. So, and we need to understand how we got there. So the question is, if you go back to the picture, you're going to see, so how did we get, let's say, from the mono supermarket to the multi-brand supermarket, to the open economy? And I think there is one major trigger, which I call the decoupling. So basically, if you have a look at what was the case before, you're going to see that you had, let's say, the front end and the back end, they were kind of connected, the infrastructure. And banks were owning this. They were, let's say, the own provider. And now we have kind of there is a major difference. Now you have the cloud. So what, let's say, used to take years to build, now you can go onto the cloud, you can rent, it's a pay-as-you-go model, and basically you have it in months. And if you look at what this decoupling has done, is exactly this. So you see there is the iceberg. Most of the times what we see only the top of the iceberg, right? So you see only the front-end view. This is what most of us as consumers see. But then what we don't realize is that, let's say, below the iceberg, and this is what I call the decoupling, you have all this back-end, what I call. And the back-end is the enabler. So without the back-end, you cannot do anything. So now, all these fintech players that we have seen over the past many years, they were basically using this back-end to kind of work on the front-end. So that's exactly what has been happening over the past many years. And guess what? If you go to the, let's say, from the open economy to the platform economy, what was the next trigger? It's APIs. So nowadays, APIs are ubiquitous, right? I mean, you cannot do anything if you don't have APIs. But what many people don't realize is that APIs is actually an old technology. APIs is basically a technology of the 1960s, decades ago. And the change was that around, let's say, the beginning of the 2000s, we had the so-called web APIs. And they were essentially a technical standard. So today, the APIs they became, I would say, the rails of the modern economy, right? So today it's basically like if you have a translator, if you need to communicate to someone and you don't know the language they speak, basically you get a translator. This is exactly what APIs do. They connect two sides, and they basically, based on the APIs, you have the flow of data. So this was exactly, let's say, the trigger for the transition. And then you have what? Today you have Gen AI, right? Artificial intelligence. And the issue is the following. If you think about technology and how fast technology has been moving in the past, you're going to see what? You're going to see that, for example, it took us years and years to go to what I call mass adoption, let's say to 50%. If you look at PCs, for example, it took them 20 years to get to 50% adoption. Internet, a bit better, 9 years. Smartphones, 6 years. Mobile wallets, 10 years. And then you had what? Then you had Gen AI, ChatGPT. I mean, that's probably the tool that we all know most. And I think you're familiar, I'm not sure if you're familiar with the number, but it's basically 100 million users in a couple of months. In a couple of months. So if you look at the line, you're going to see that you now have, let's say, in a couple of years' time, you have reached kind of, let's say, a number which is double-digit, high levels, so 30–40% within a couple of years. So why? Because today we have the infrastructure, we don't need any hardware, and of course users are used to it. They're used to working with apps, they're used to working with browsers, so this has made a big difference. Now, the thing is the following. AI. One of the first outcomes of AI, and this is also leading us to the agentic economy, is basically breaking the e-com value chain. Why? If you look at the numbers, you're going to see the following. What is the old model that we all know? You go to a search engine, you go to Google, and what do? You search, you have the links, you click, and then basically you go to a website, and then you have what we call conversion, right? I mean, that's what we mostly do today. So today you're going to have, let's say, and this is called this SEO, so search engine optimization. So basically, you are trying to get as higher in the rankings as possible. But the reason why this is breaking is that with AI, this is no longer the case. You're not going to have, let's say, SEO working because everything is happening within the AI tool. So it's happening immediately. You don't have this click. And this means that the old KPIs that we used to have, they are useless. We need to have something different. So now the name of the game is not, let's say, how do you do search engine optimization, but is how are you discoverable by the AI? So how can you get discoverable within the AI tool? That's the name of the game. And there is a huge difference. I mean, if you look at the numbers, 50% it used to be informational, let's say traditional search. So I go on and I look for information, I ask. And now 50% is new intent. So 50% is completely new. And the 50% of the information now is 20% less, is actually 30%. So this is an amazing transformation. So you actually have the value chain, the e-com value chain breaking. And that's big news. Now, I talked about the agentic economy. And just to go one step back, essentially, we need to understand what are agents. So agents are nothing more than software that they work on behalf of us. So basically, they are able to take decisions based on guidelines that we provide to them. Now, there is one major difference why agents will be so predominant. And this has to do with automation, with autonomy. Now, the autonomy of agents is doubling every 7 months. Right now, it's 1 hour. So if you go to an agent, if you give them a task, they are able to do this in an autonomous way within an hour. Now, imagine that this is doubling every 7 months, meaning that in a few months' time, in a few years' time, you're going to have agents able to run completely on their own for days, for weeks. this is exactly why, this is exactly the big game changer, the autonomy of the agents. And then we are now, if you look at the evolution of payments, I would say that we are now in what I call the AI agentic payments phase. So we started from cash payments all the way to card payments. Then it was the digital payments. We explained before, let's say, the platform economy. We had the blockchain. We're going to come to blockchain as well, but we have blockchain also since at least 10 years. And we are now at what we call the AI agent payments. And the difference is the following, that we are now seeing a new infrastructure being built, which is completely new. And this is coming faster than what we think. Now, because of this, you have lots of big players that are, of course, worried. They are trying to understand what's happening. And of course, what they are trying to do is that they are trying to position themselves within this new landscape, right? The big names. So, for example, PayPal, the likes of MasterCard, the likes of Visa. And everyone, and if you look basically at what has been happening over the past few months, you're going to see lots of announcements. So every now and then, you see a new announcement. Back in April, and probably that was not only a coincidence, you had all of them actually announcing in a agentic commerce play, right? And the question is why? The answer is very, very simple. Because imagine if you're now operating in what I explained before, so in a landscape where you have agents taking decisions, it's not going to be the case that you have the traditional checkout, whereby if I want to buy something, I go and, for example, I choose the payment method of my choice, right, at checkout. It's no longer the case. Why? Because now you have agents basically taking the decision on my behalf based on the instructions that I gave them. And here you have a major difference. And the difference is the following, that the agent is going to have, let's say, a default payment method, or maybe a default payment method based on the type of purchase I want to make. But the thing is the following, I'm not going to choose myself anymore the payment method. So imagine that the player that is owning the credential within the wallet is basically going to be dominant. And this is exactly why all of them are now launching a play. It's about positioning in this new landscape. And if I am, let's say, one of the big players, there are other names as well. What I don't want to happen to me is what? I don't want to find myself disrupted by someone else's agent. And this is exactly the case. This is exactly all the headlines that you are now seeing over the past few months. And this is going to continue. Now, in the same direction, I don't know there was an announcement by ChatGPT, instant checkout, just a couple of weeks ago, a few days ago. Who was who knows about this? Okay, so what ChatGPT did a few days ago is exactly what I was talking about, and this was kind of, let's say, long expected. So basically, they launched what I call instant checkout. What does it mean? I'm, inside ChatGPT, right? And instead of me needing to go out and make a purchase, the purchase is happening within the tool. It's exactly the same play. And now what they're trying to do is that they're trying to kind of become, I would say, the default scenario for this kind of tools, meaning working with big players, working with merchants, and working with banks. But this is exactly what they're trying to do. And if I talk about this, does this remind you of anything? So actually what ChatGPT is trying to do, and the likes of ChatGPT, is something that we've seen before. This is the evolution of the browsers, right? And then, I don't know, 20 years ago, people would ask themselves, why would somebody want to control the browser? look at what's happening today. Whoever is controlling the browser, and if you look at the evolution in the market share of Google, of Chrome, that was not existing a few years ago, it was all dominant by Microsoft, by the Internet Explorer. Basically now, using the browser, you're the one controlling lots of things behind. You're controlling how things are being presented. And this is exactly the case. So what now ChatGPT is trying to do is not very different from this game. And the question is how this graph, how this evolution is going to look like a few years from now. So who is going to be there, let's say, in the place of Google Chrome? Is it going to be ChatGPT? Are you going to have someone new coming in and taking the market share? No one can guarantee that because I'm today dominating, as Microsoft was a few years ago, that things are going to stay as they are. But this is exactly what this is about. Now, before we finish with agentic commerce, I just want to say that basically agentic commerce is building a layer on top of the existing payments layer. It's not replacing. So you're going to have agents basically coordinating, but one layer above. And the question is the following: how is this changing the value chain as we know it today? I mean, you still are going to have the user, and then you have a few new players, and you also have some players that they will need to adjust. So, for example, you have the AI assistants. The ChatGPT and the instant checkout is one, right? So you're gonna have this controlling, let's say, the interface and the customer relationship. And then you're going to have vertical agents. So they're going to be focusing on specific domains. And these agents are going to be connected, for example, let's say, to platforms that are also very much specialized in a specific sector. And then, of course, you're going to have merchants, but the merchants, they're going to have a very, very different task. And this task is what? They need to be recognizable by the agents. It's not enough if I have a good product. The product needs to be recognizable, so the agent is going to be the one taking the decision. So somehow I need to get my product in front of the agent and not the consumer anymore. And this is a huge change. And of course, you're going to have the payments players, and they still control the payments flow. But instead of now of having to recognize, to do KYC, to recognize, for example, the consumers, they're going to have to do KY agent. So they're going to have to understand who is the agent, if the agent is a legitimate one, and how exactly they can interact with the agent. And of course, you're going to still have the banks and the schemes and the platforms, but what I'm trying to say is that the landscape and the value chain is moving very fast, and you're going to have to adjust. I mean, all of them are going to have to adjust. Now, the thing is the following: it's not only agents. I think it's good if we know what's happening, but it's not only agents. And if you look at the landscape today, you're going to see what? You're going to see a few players. So you have, for example, the banks. Of course, you always have the banks. But we discussed how the banks, how we went from the, let's say, from the mono supermarket setup, so it used to be only the banks, and now the banks are basically not competing against banks anymore. No, it's not the case. So if you're a bank, and if you think that your competition is banks, then I think you're mistaken. It's not banks. It's everyone else. So basically what is happening is that you have the same playground, you have banks, but you also have big techs, you have fintechs, you have the new players, and now you're going to have also lots of new AI startups joining the game. And all of them are competing for one thing, for the customer relationship. Based on what? Based on hyper-personalization, what I call mass customization. Based on the agents, it's the autonomous finance. You have ecosystems, you have embedded solutions, you have trust, you have all these things. But the playground is one. And that's a big change. Now, if we also go a step back, and if you remember the story I told you, you're going to see what? If you look at the banks used to have lots of products bundled together. And then you had the fintechs via the decoupling, and what did they do? Basically, they were attacking niche segments of the banks. So this was the unbundling. But now look at your mobile phone. How many apps do you see today? I mean, probably most of us, we are using tens of apps today for different things. So at some point, there is a need to rebundle, actually, so it's a full cycle, to rebundle things under one, let's say, controlling what I would call a super app or a platform, you name it. The thing is the following. We are not going back exactly to the bundling scenario. Why? Because now there is a basic difference. And the difference is the following. So you have AI. So it's not only about aggregating lots of apps under one umbrella, which is very popular in many places in the world, but it's also about orchestrating. And this is what AI is now doing, right? So this is exactly where we're now at, and this is also going to have some very serious implications. Now, we have been looking at how things have been playing out. But on top of all these things, you also have new infrastructure. Now, who is familiar with UPI and PIX? So UPI is in India, and PIX is in Brazil. So who is familiar with this? Okay. So basically, if you're not familiar, I think you should be Googling or you should be asking ChatGPT better. So these guys, in 2016, in India, you had a basic problem. They didn't have the traditional infrastructure that we have in Europe. So what they did is that they built this from scratch, 2016. Look at the evolution. So they started with 4 or 5%, single digits. So now UPI, which is basically the instant payments rails for India, is at what? Is at 80+% of usage. 80+. In India, you have, I think, 1.4, 1.5 billion of people in India. Do you know what is the translation of this number in terms of number of people, number of users? It's 1/4. So 500 million people, 400 to 500 billion people are using this within 8 years. Actually 8 years is now. But these guys, if you look at the numbers, within just a few years, they were able to reach 50%, 60% of the market. And the same was the case with Brazil. So in Brazil, they call it PIX. In Brazil, they started 2020. So just in 5 years' time, these guys, they reached over 50% of the market. I think in Brazil, it's even, if I'm not mistaken, the population in Brazil is probably 215, 220 million people, out of which 150 at least, maybe a bit more, are using PIX. So this is new infrastructure, completely new, taking place. And on top of this, you have what? We discussed about digital, we're going to discuss about digital wallets, but you have digital identity. Who knows about the European Digital Identity Wallet? Who has heard about this? Of course. So, in very simple words, what's behind this? We are now talking about payments, but payments were most of the time not connected to the authorization, right? But to make a payment, the system needs to know who I am, right? They need to be able to identify. So imagine now that you have the payments, and for the payments to be able to work, especially connected to agents, you have to have what? You have to have identity. So the European Union is now building exactly this, being tested as we speak, and the idea is that this is going to have 80% of people in Europe using this. That's the target, that's the goal, by the end of the decade, by 2030. So this is one of the huge plays. This is, again, infrastructure, connected also to AI. Now, lots of headlines around what? Around stablecoins, and these are just a few. Every day there is a new headline about a new player doing something with stablecoins, right? I think we all agree on this one. The question is the following. Why? Why is everyone focusing on stablecoins? And before I explain this, I just want to clarify something. When you talk about stablecoins, it's basically crypto. Just to be very, very frank and very direct, stablecoins are crypto. The only difference is the following, that stablecoins are basically pegged to one, let's say, to the dollar mostly. So they are stable. So the problem that stablecoins are solving is the volatility of crypto, right? Now, and what they are solving is the following. If you look at the traditional value chain, you're going to see lots of intermediaries. Now, with stablecoins, you don't have any intermediary. The only thing that you have in between is basically a wallet, and that's it. And that's why you see lots of headlines. And the thing is the following. Basically, stablecoins today, they have one problem. And all the headlines that you see, they are because of this problem. So the stablecoins are good, the idea is good, but they have, let's say, 3 issues. They are not optimized for payments. Why? Because they have still high fees. Their capacity is kind of limited versus the capacity that we need for payments. And they lack essential features. So, for example, the payouts, the reconciliation that we need in payments. But these are things that we can fix. So all the headlines that we see today around stablecoins are basically trying to solve these 3 problems. And the question is not whether stablecoins are going to become the new rails, but how and when, not if. Now, and this is exactly the reason, if you look at the central banks, that every central bank today, as we speak, they are building a CBDC, a central bank digital currency. Why? Because of stablecoins. This is the reason. So if you look, I mean, there are 130 countries that are building a CBDC today. So they represent 98% of the digital economy, 98%. Every single digital central bank today globally, they are building a CBDC. And of course, the European Central Bank is building on so on, and we call it the digital euro. Why are they doing this? Of course, they don't want, I mean, stablecoins are, privately issued. So who owns the next generation rails says a lot. So if you are a central bank, of course you don't want to seize control of, to give control of the infrastructure to private players. And this is exactly the reason why everyone is building this. And the wake-up call was in 2019 by Facebook. It's called Libra. Not sure if you have heard about this, but it was a failed approach. But this was a wake-up call for central banks back then. Now, what is the outcome? The outcome is what I call the multi-rail payments landscape. I'm not going to go through this, but basically what we have today is that you have existing rails that we know, and you also have new rails that are now kind of coexisting with these existing rails. And this is something that is only going to intensify. Now, we have talked a lot about infrastructure and about rails, but the question is, okay, it's good I have a car, the road should be good, but what's happening one layer on top? What's happening one layer above? And this is the question. So if you look at the global payment methods, so if you look at the global landscape, you're going to see what? You're going to see, let's say, 2 poles. On the one hand side, you have POS. On the other hand side, you have e-commerce. Now, of course, the POS is 4 or 5 times more than e-commerce, of course. But if you look at the growth at e-commerce was around about, over the past 10 years, 8%, and POS was growing at 4%. Now, 10 years ago, digital payments were roughly around about 1/3 of e-com value payments. Today, they are 2/3. And in a few years' time, they're going to become 80%. Now, you see something else. So by 2030, 1 out of 4 in-person transactions is going to be done by mobile phones. And then you have new payment methods like buy now, pay later. And this is amazing. I mean, look at the number of buy now, pay later. 10 years ago, the volumes, it was just a few billions, just a few, 2 or 3 billions. Do you know what is the number today? Around 600 billions. So do the math to understand what kind of increase is this. And of course, we are all talking about the cards, but basically the cards so far have stayed very resilient, and I don't think that they will be going anywhere. I'm going to be explaining why. Now, very, very quickly, because I think I know the time is running out, but I think this is important to understand. Digital wallets. We discussed before about the digital identity. If you look at the growth of digital wallets, it has been amazing. It is now the #1 payment method globally, both on the e-com side and on the POS side. You're going to have you have almost 5 billion users using digital wallets. And actually, if you look at the players, so if you look at basically who is using digital wallets across the landscape today, you're going to see that everyone is using digital wallets. You have the super apps, you have banks, you have merchants, you have telecom providers, you have account-to-account players, you name it. I mean, I was trying to categorize, and this is exactly what this slide is about. I was trying to categorize who is exactly doing what with digital wallets, and this is what I came up with. And this is amazing if you think about it. And the reason is exactly the growth of digital wallets. Now, last thing, because this is also something that is kind of a misconception. The misconception is the following. You have people saying digital wallets, they are now taking over everything, and they're going to be also taking the role of cards. But this is not the case. This is the evolution of digital wallets and the market share across a few countries. And you see a common pattern. What do you see? Of course, you see, let's say, the cards share kind of, let's say, going down, not by a lot, which is expected. But if you see how much of the spend within the digital wallets is done via cards, this is huge. So the average is more than 50%. In some cases, 70%. So most of the spend that we see in digital wallets today is done via cards. So these are not two separate things. Okay, so that was it. If I want to close with something, I think it should be the following. We are moving, and I explained why, into a programmable, multi-rail, AI-driven payments landscape. And if you look at who will be influencing this going forward, it's going to be six things. It's going to be trust, that's why it's digital identity. It's data, right? Orchestration, basically agents orchestrating everything. It's who is going to own the customer relationship. And then, of course, it's going to be distribution, so the platforms, and then regulation and governance. So these are the things. Thank you. Hopefully it was useful. Thank you.
Thank you very much, Mr. Panagiotis Kriaris. Thank you for this